Morning, guys. Pascal here from Advice First Financial. Had a question yesterday from an employee of a company, of a business that wasn't in a pension scheme last year, is in one this year, but wanted to see, can they make a pension contribution for last year? Now, remember, she's an employee of a company or a business. So she joined the pension scheme this year, wasn't in one last year, wanted to make a pension contribution and wanted to know whether it was possible or not. And the answer is yes. Even if you are an employee of a company, now is a good time to look at your taxes for last year and see, can you save a little bit of tax? So if you make your contribution for last year before the 31st of October, you will get tax relief at your marginal rate. So this particular person wanted to look back and see, well, listen, how much can she put in? We've worked out that she could put 15,000 euros in. She's in 40% tax. So she's going to get 6,000 euros back for making that contribution if we get that contribution into her pension before the 31st of October. So what we do is we set up a single contribution pension for last year. We put the money in, she gets her tax relief. It is that simple. Now, the important thing to remember is that one, you can, and how much can you pay in. So let me share a screen and I'll show you, what you can actually pay into your pension. So obviously it depends on your age. So in the year that the money was earned. So last year, this particular lady was between 50 and 54. So you can see that here, she can put 30% of the income that she earned in that year. So she can put 30% of her income in for the income that was earned. So she can get full tax relief. The lady's in 40% relief. So she can get full tax relief on that contribution. And as you can see, as you get older, the contribution levels that you can put in gets higher. So the question is, should you actually pay into a pension, was another one that this lady had, another question she had. So when we figured it out, the idea of her paying into a pension, she's in her 50s. She's only started paying into her pension. So getting as much money into pension planning for her, it was very, very important. Reason being, she's going to retire at 65. Hopefully she lives till she's in her 90s and she's on a fairly good wage. So when she stops work, that wage, that income, that cash flow is gone. So the idea of having a pension, having something to replace that income was very, very important to her. And what other choices do you have? What other options do you have to have your cash flow continue into retirement? And remember, when you stop work, you don't stop life. So you don't check out of life when the minute you retire. You don't retire from life when you retire from work. So you're not going to sit at the house looking out the window. You are going to be out and about. You are going to spend money. Your expenses, your bills, your running the car, changing the car, your holidays, your life will continue even though your work doesn't. But the income doesn't. So the idea of a pension is really to replace the income you're now not earning. So it is important. The best way to do that is through pension planning.